Hey everyone, welcome back to the Crypto Podcast. I'm so glad you're here. Today's episode is a little special. Quite a few of you reached out to us saying you couldn't make it to our live webinar last weekend, but still wanted the insights. So I thought, why not record a very quick session for you? That way you can catch up on the highlights and the big takeaways that we covered at your own pace. Now we're diving into something that's not just close to my heart, but honestly, it's a family favorite sector we for research. It's healthcare. If you've been with us in the class before, you know how we roll. We start big picture, the macro economy, global shifts, and then zoom into sectors that have a solid growth runway. So Vijay and I sat down to think about which sector to explore. Healthcare was a no-brainer. It's dynamic, it's resilient, and for the next decade, it's shaping up to be the sector to watch. And here's a bonus. Stick around till the end because I'll also share how you can invest in this sector through ETFs, mutual funds, or directly into stocks. Plus, a quick peek into our upcoming stock analysis deep dive course this October for those who want to sharpen their skills even further. Before we start, quick disclaimer this podcast is for learning and discussion only. Nothing here is medical, financial, or investment advice. Any companies that I mention are just examples, so please do your own research before making any money moves. All right, let's get into it. Think about how the internet transformed IT over the last 2 decades. Healthcare is now standing at the start of a very similar growth wave. Why? Two big reasons: demographics and economics. On the demographic side, the world is aging. Populations in places like Japan, South Korea, and Europe are already skewing older. By 2050, nearly 40% of people in East Asia will be over 65. And here's the kicker: aging means more healthcare demand, more checkups, more medicines, and more hospital visits. Now, contrast that with India. Today, India looks young. The median age is just under 29 compared to 38 plus in developed nations. But in a couple of decades, that youthful bulge will move towards middle and old age, which means healthcare demand in India is just getting started. Also, both life expectancy and healthy life expectancy in India have been steadily improving over the years. Now, this is important. It's not just that people are living longer, it's that they're spending more years in relatively good health. That's a powerful demographic shift. Add in rising incomes, urbanization, more insurance coverage, and groundbreaking advances in medicine, and suddenly healthcare isn't just a sector, it's an economic megatrend. And here's the thing that gets me excited as an investor. India currently spends only 3.3% of GDP on healthcare, compared to a world average of almost 10%. That's a massive runway for growth. It's not a saturated market, it is an expanding one. Let's also remember how the disease landscape has shifted. Decades ago, India's biggest killers were communicable diseases like TB and malaria. But with vaccines and sanitation, those have dropped. Now, lifestyle diseases, diabetes, heart disease, cancer, are surging. These are not one time illnesses. They need ongoing care, medicines, diagnostics, and rehab, surgery if required, which means the demand isn't just growing, it's recurring. India's healthcare isn't just growing on its own steam, it's being supercharged by heavy government tailwinds. From policy reforms to record level budget allocations, the sector now has the structural support that makes its growth runway even stronger. So now that we've done what makes healthcare the most exciting sector, let's zoom in on the healthcare value chain. Now, this is where things get really interesting. When most people think about healthcare, the first image that pops up in your head is a hospital or maybe a doctor in a white coat, but the reality is so much bigger. Healthcare is an ecosystem. You have hospitals and healthcare delivery. You have pharma, biotech, diagnostics. Plus, you have enablers like medical devices, insurance, telemedicine, even back end players like MediAssist who make the whole system run smoothly. But since we've only got about 10 minutes today, let's focus on three of these: hospitals, pharma, and diagnostics. Hospitals first. Not all hospitals are the same. You've got single specialty hospital, multi specialty hospitals, tertiary care centers, and even niche players like IVF or oncology clinics. Revenue wise, inpatients are the real engine. About 70% of their hospital revenues come from them. Why? Because it's not just the bed charge, it's consultations, diagnostics, surgery, consumables, everything bundled in. Outpatients do matter, but the big money, that's in the inpatients. Now, this is why hospitals are so focused on expanding bed capacity and specialized surgical infrastructure, because more inpatients means more revenue across multiple streams at once. So, when we think as investors, the big takeaway is bed count expansion is not just about scale, it's directly linked to their revenue growth. That's the lens we want to keep in mind when we analyze hospital stocks. The healthcare industry and especially hospitals are being propelled by a mix of very powerful tailwinds. Medical tourism is booming, government policies are becoming increasingly supportive. An aging population coupled with rapid urbanization is driving higher demand for specialized and advanced healthcare services. Add to that rising incomes and broader insurance coverage, and suddenly a much larger part of your population can actually afford to use these services. Another key factor is the shift in disease patterns. Communicable diseases are declining, but lifestyle related conditions are on the rise. These are long term conditions that require ongoing treatment, which means hospitals are not just one time touch points, they become long term care partners. Put all of these together, and you get a sector with a very clear growth runway. Now, technology in hospitals today is not optional, it's essential. It improves their profitability by making processes faster, reducing errors, and cutting wastage. There is an increased adoption of AI in hospitals today. AI helps the hospitals track what's happening in the medical world, it gives them better diagnostic capabilities and allows more accurate detection and treatment of patients. India runs one of the biggest telemedicine networks in the world. All listed hospitals have created 24/7 telemedicine apps widely used by women and older people, especially from rural areas. Smart wearables are being launched every day. Real time data tracking allows doctors to personalize treatments. This is a niche and fast growing growth area. Put together, this isn't just better healthcare, it's also why this sector is becoming one of the most investable stories of our decade. To sum up, Indian hospital sector is growing on multiple fronts. We see a mix of multi and single specialty hospitals expanding to meet rising demand. Strong growth drivers, higher incomes, broader insurance coverage, supportive policies, and greater health awareness are fueling this momentum. Technology is transforming care from digital health and AI to telemedicine and making hospitals more efficient and patient friendly. Rapid expansion in beds and new facilities reflect both the domestic demand and the influx of foreign investment, which is helping shape the sector's future. On top of that, medical tourism is adding a new revenue stream, with international patients increasingly choosing India for quality, cost effective care. All of these together paint a picture of a sector that's evolving fast and creating exciting opportunities, not just for patients, but for investors who know where to look. So far, we've looked at one important part of the healthcare value chain, the hospitals. Now, let's move on to the pharma sector. Why pharma next? Well, India is famously known as pharmacy of the world. Let's dive in to see why it has earned that title and what opportunities it presents for the future. Let's look at the segments in the pharma sector first. Now, first you have APIs, which is active pharma ingredients, the active ingredients in the medicine. India is the world's third largest producer of APIs. You have CRAMS, which is contract research and manufacturing. Big pharma outsourcing to India for cost effective, high quality production. You have biosimilars, which are affordable versions of expensive biologics for cancer and autoimmune diseases. Huge growth expected here, and formulations are your finished medicines that get exported worldwide. Here, each piece strengthens India's role as a global healthcare hub. Now, increasingly, companies are focused on R&D, which is really the backbone of advancements in the pharma sector. The pandemic made every country realize the importance of having strong in-house research capabilities, especially in times of crisis. Here in India, pharma R&D investment is projected to reach 17,000 crores, around 2 billion US dollars by FY28, supported by policies that encourage intellectual property, commercialization, and skills development. The government is also giving a major boost, allocating funds for bulk drug parks, medical device parks, and overall pharma infrastructure, while setting up new nursing colleges and centers of excellence. In short, R&D is no longer optional; it's becoming central to India's pharma story, driving innovation, global competitiveness, and long term growth. The growth drivers of Indian pharma, in summary, are rising demand, government push, global recognition, where India is like the pharmacy of the world with affordable HIV drugs, low cost vaccines, and US FDA WHO compliant plans. We have the cost advantage and a talent powerhouse, large pool of scientists, researchers, and healthcare professionals. Strong market outlook where pharma market is projected to hit 130 billion by 2030. Contract research and manufacturing industry expected to double by 2028. In summary, pharma sector is in India is staring at a very long growth runway with APIs, formulations, biosimilars, and CRAMS all firing together. The foundation looks strong. Yes, global pharma is seeing wild swings right now thanks to geopolitical tensions, trade wars, and shifting tariffs. But India seems to be playing the long game. The country has built cost efficiency, scale, and now R&D strength into the system. In other words, no matter how the winds shift globally, India is positioning itself not just to survive, but to lead. Now, moving on to diagnostics. Diagnostics is essentially the science of identifying what's happening inside the body through blood tests, scans, or pathology work. Traditionally, it was used mostly to confirm a disease after symptoms appeared. But today, diagnostics play a much bigger role. Early detection, prevention, and even ongoing health maintenance. Diagnostics in India, especially pathology and radiology together, are projected to grow at about 14% CAGR, hitting nearly 25 billion USD by FY28. But this isn't just about more tests being done, it's about a shift. Traditionally, we went for tests when something went wrong. Now, people are investing in early detection, preventive checkups, and even wellness tracking. Diagnostics are no longer the sidekick to hospitals, they are becoming a growth engine in their own right. Now, think home sample collection, online booking, telediagnostics. These trends spiked during the pandemic and have stuck. More people are now paying for regular checkups, insurance is expanding access, and tech enabled chains are scaling nationwide. On the public side, government investment is strong, expanding diagnostics in the public health network and making access more affordable nationwide. Of course, it's not without challenges heavy capex, regulation, intense competition, but the growth runway is undeniable. Diagnostics is moving from a support act to a lead role in healthcare in the healthcare story. Now, due to limited time, let's close with this. Diagnostics is clearly a powerful growth engine within healthcare and an area worth focusing on. Of course, we haven't touched on other critical parts of the value chain like medical devices, third party vendors, insurers, telemedicine, and digital health. Every single one of these is a potential gold mine for innovation and investment. But for today, we focused on the big three pillars: hospitals, pharma, and diagnostics, that are already shaping the future of Indian healthcare. All right, let's talk about the big question: how do you actually invest in this healthcare opportunity? But quick disclaimer, what follows is not a buy or sell recommendation. Everyone who's attended our classes know how important our checklists are. Please do your own research, apply the frameworks we teach, and make informed decisions. One way of getting invested in this growth sector is through nifty healthcare ETFs. These give you broad exposure to the sector in one go, almost like buying a basket instead of picking the fruits one by one. It is simple, cost effective, and great if you're just getting started. Another route is through mutual funds. There are healthcare focused funds that are actively managed, meaning professional fund managers are making the calls on which companies to include. This gives you diversification with a touch of expert judgment, but make sure to apply our GRIP framework and the checklist we used in our classes to choose the fund that works for you. And of course, the third way is direct stock investing. That's where things get interesting because while ETFs and funds give you broad exposure, it's in stocks where you can discover those mid to small cap companies, the hidden gems that can potentially deliver outsized returns. Now, if you're wondering how do I actually analyze these stocks, what are the fundamentals to look at, how to use technicals for timing, or how to spot a true competitive moat. That's exactly what we cover in our upcoming stock analysis deep dive course this October. If that sounds like something you'd want to build confidence in, do DMS for details. And that's where we'll wrap it up for today. If this sparks your curiosity, check out our Substack. We've put all our detailed reports that we referred and visuals there so you can explore deeper. Thank you for tuning in, and as always, stay curious, stay invested, stay kind, and I'll catch you in the next episode. See ya.